he's had to say that a number of times lately, and yet there continue to be questions about whether the Federal Reserve would go into negative rates. You see the action in the banks, down another 6% this week, now down 32% for the year. I mean, do you think the market is trying to push the Fed or communicate something differently than what we're hearing from Powell?
You know, markets are funny things. I think some people in markets, and especially the people that talk rather than the people that trade, which are not the same people, are into the idea of negative rates, look, they're always looking for something new. The Fed's done 72 things, and what else could it do? I think Powell came about as close as he could come to saying absolutely never, never, never. You always want to leave the door open a crack. By the way, I don't personally think negative rates is such a bad idea, but I'm not a voting member of the committee, and it's very clear the committee is against negative rates.
Why are they not such a bad idea? If you look at Europe or Japan, their banking systems have been crushed and their economies haven't been that stimulated.
No, that's right. The argument that's often made against negative rates is that they're not a panacea, as if somebody had suggested if you go from positive 12 basis points to negative 25, that was going to be like a revolutionary change, that all of a sudden everything would be great. Nobody ever claimed anything like that. It's a small decrement to interest rates, analogous to what happens when you go from 50 to 25 to 12. If you go a little further, you're in negative territory. So it's not that big a deal. And I might add, Sarah, that right now, it's just not important at all. People are not sensitive to interest rates right now. They're sensitive to fear and the disappearance of markets. And a few more basis points on interest rates not going to make a difference.
So I thought Powell did a nice job explaining how they can provide liquidity, and they've been doing so abundantly in many ways that they've never done before, but they cannot deal with solvency issues. And for that, he looks to Congress and really made a pretty strong plea for Congress to do more, because what we're looking at is a pretty dire scenario. What do you think about the Fed chairman going in that direction, go into a place where we don't usually see the Fed going to?
Right. I think it's very important. Powell has repeated several times, as have many other people, that the Fed is in the business of lending under severe strictures, not spending. And when it comes to spending, that's up to Congress. Now, where those two come together is, as you know, the Treasury has basically goaded, instructed, authorized, whatever you want to say, the Fed to do a massive amount of lending in areas which have some risk, where the Fed would never normally go, and has appropriated the first 10% of loss. So if the Fed should lose $100, if the Fed should lose money, the first 10% of the losses would be absorbed by the Treasury, which is one step away from the Congress, by the elected government. What's never mentioned, and hopefully will never happen, is what happens if the losses go beyond 10%? Then they will belong to the Fed. They will be on the Fed's balance sheet. Now, I don't think that'll happen. Jay Powell doesn't think that'll happen. But, who knows how bad this thing could get.
Alan, there's been some reflection. Obviously, it's only not just been a few minutes now since Powell's webcast, but this idea that in order to justify the Fed's actions so far, maintain political will for Congress to do more, which he clearly wants, in the words of one economist this morning, he needs to accentuate the negative. How much of that do you think colored his comments this morning?
A little bit. If you're the Fed chairman, as opposed to a talking head on CNBC like me, or even a CNBC commentator like you can say things like that. If you're chairman of the Fed and you come up with all gloom and doom and the world is coming to an end, that's not good. So you're not going to do anything like that. I thought he went about as far in the gloomy direction as is prudent for a Fed chair to go, especially, this is what struck me actually, looking much more long-term than the Fed usually does. The Fed doesn't usually concern itself with very long-term things for a simple reason. Monetary policy has its effects within 2-3 years, And today's monetary policy has essentially nothing to do with what the economy will look like 5-10 years down the road. But Powell really opened up looking at the long term. And, you know, while it wasn't the gloomiest assessment you can imagine, it certainly wasn't happy talk.